Happy Friday, Brian Manning here with the weekly update. Let's get right to it. So Monday this week, we got existing home sales. Existing home sales down slightly. They were down 0.6%, but on a national basis, inventory is really down. So with inventory being so low, we're going to see existing home sales decrease. There's just no way around it. On a national basis, our inventory level right now is at 4 months. But what was interesting to see, though, is that this was the first time since 2015 that the inventory levels did not decrease. So we're at 4-month supply across the U.S. Tuesday this week, markets were really moving based off of geopolitical tensions, everything in regards to the rhetoric with Iran. You know, financial markets are not a fan of the rhetoric with Iran. Iran has the ability to disrupt global markets. They have the ability to disrupt global trade. They could have an impact on the cost of oil. If you have the cost of oil that's going to increase, that would create inflation. And if we get inflation in the marketplace, that's going to have a negative impact on mortgage rates. So overall, rhetoric with Iran was definitely making some movements in markets on Tuesday. Wednesday this week, and with every single Wednesday, we get the Mortgage Bankers Association read on applications. And what's interesting to see is that even with mortgage rates being higher and inventory being lower, purchase applications on a year-over-year basis are up 2%. So the purchase market is still really strong. Thursday this week, markets were mixed. Facebook's certainly bringing down some of the markets, but the agreement with the U.S. And Europe in regards to not having tariffs fall into place was certainly impactful, and we saw some positive movement in the stock markets there as well. And then today, the big news for today is the GDP. So this is the first look at the second quarter. So every quarter it gets 3 reads. So this is the first read on the second quarter, and GDP came back at 4%. I'm sorry, 4.1%. Some people were thinking it would be as high as 5%. That would just be a huge number. So 4.1%, still a good number. What's interesting though is you look at the average GDP over the last 4 quarters, the average GDP is 3%, and that's the best number in over a decade. Although some of us are curious is to see, was there an impact in the GDP, because you have a lot of business transactions and purchases taking place in the face of tariffs, and they're trying to get these transactions on the books and taken care of before tariffs come into place and make the cost of goods more expensive. So we'll have to wait and see what happens with GDP, but there certainly could be some manipulating or pre-sales that were taking place there to have an impact on the number as well. I'm around all weekend. If you have any questions, let me know. Happy Friday. We'd love to be part of your business. We'll talk to you soon. Have a great day.